Hello viewers, this is Rishabh Bhatnagar. I'm joined by Amit Jain, the founder of CarDekho Group, as well as a shark on Shark Tank. Thank you so much, Amit, for taking the time out. My first question would be on the startup ecosystem, right? You're an active player, you're an investor, you're a founder. What do you make of the funding ecosystem currently, the heightened due diligence, what we're seeing from VCs? What is your comment on the entire ecosystem?
Look, I think the markets are tough. Everybody says winter is here. But I personally think for good companies, there was no winter ever. We raised last year in Inorganic, we raised in Southeast Asia. The reality is if you're building a good, sustainable business, there's no winter for you. But if it's not the one of those sorts, then I think, winter is definitely there. There had been a huge markup of valuations a couple of years back, and that's what's basically troubling the environment in my view. If you see, everybody raised at a very high valuation, which was probably a few years ahead of time. Now, the winter is primarily, being felt because now the multiples have, been adjusted to the right number. So valuations have to go lower. So people are trying to grow into their valuations is what I feel. So the market will come back as for good companies, and I think the resilient ones who have created a good business, there'll be no winter as we move in the journey.
Correct. Let's walk a bit here, Amit. Let's move on to your baby now, CarDekho Group. It has diversified quite a bit over the past 12 months or so. You've moved into InsurTech, there's Rupee as well. What else? There are certain segments that are also hitting profitability for you. Can you give us a picture on the entire scenario currently? What are the different segments doing? And let's start with that.
Look, CarDekho Group, while it looks very diversified in business, we are into insurance, we are into finance, we are into new cars, we are into used cars, we are into auctions, we are into classifieds, right? Reality is it's the same consumer. The way I look at it is it's diversification with a purpose, because the same consumer buys a new car, takes a finance, takes an insurance every year, then sells it out in 4 years. So practically, if you look at it from our perspective, it's the same consumer with whom we are interacting across the life cycle. It's an infinity loop. Then he sells his car, then buys another one. So he joins the loop again. So the way I look at it is, we have kind of gone deeper with the same consumer. Second thing we did was we basically started diversifying into adjacent categories. For example, we are already in auto insurance. We realized the same consumer buys private health and life insurance. So we entered health and life segment. If we think about, we already do a huge lending business. So just to give you a segment-wise split, new car is our oldest and very profitable already, with almost 70 or 80% gross margins. Has been growing consistently over the years. Then is our finance business, which now is one of the largest, finance houses. We do almost 14,000 crore of lending in our marketplace there. So that's Rupee. In Rupee, we now also have introduced our own NBFC, from which we are taking a small pie from our marketplace. We have almost 35 banks as partners, and one of the banks is us. And we're trying to create a disruptive experience because our loans are completely digital. There's zero paperwork, unlike traditional banks. So we're trying to come up with more new age disruptive lending solutions in our own NBFC. Coming to the next one is InsurTech. InsurTech now does almost 3,700 crore of premium and has grown 70% this year also. And 25% of the premiums come from health and life insurance now, non-auto basically, which has larger lifetime value. So InsurTech has grown by leaps and bounds. We have almost 150,000 agents working with us. We have penetrated practically every pin code of India. So that's something that we really feel proud of, and that's the state of the InsurTech business. It has also raised external funding last year. So if you see, we raised almost 200 million last year while the winter was on. Then is our used car classified business, where we work with all dealers. We do inventory funding with them. We help them sell their cars by listing on our platform. We also have an auction arm where we help consumers sell the car and dealers buy the car. We also are auction house for bank repossessed vehicles and insurance auctions, like total loss vehicles. We auction both of them also. A large platform auction has been built where the dealers buy these vehicles and purchase the vehicles from the finally banks, or we act as a facilitator there basically. Then we have a Southeast Asia business where we have replicated our strength, what we have done here. The brand name is called Auto.com there. So we realized that the technology is actually quite repeatable in a market which is Indonesia, which is quite like India, much like a developing market. There's no trust or unorganized used car dealers. So we have started the new car business there. We run a site called auto.com. We're also into lending business there also. So that's what the company looks like in terms of the landscape. We're looking at expansion into Saudi UAE side this year. Let's see how it moves, but we are definitely evaluating the market.
Got it. Amit, you mentioned the used cars classifieds business. I want you to throw some light on the used car retails business, right? It has seen OLX Autos also exit. I think CarDekho also exited, but Spinny, Cars24, these players are still in the market. You cited unviable unit economics as the main reason for exiting that. What exactly is happening in that market? Why are people still sticking to it if the unit economics are so skewed in that market?
Look, I think we exited because of unit economics. I did not see a large profit pool getting created unless the GMV of the vehicle actually becomes twice of what it is today. Then it can have some profits out there. But at the average ticket size of auctions which we were doing or retail we were doing was around 5-6 lakh rupee a vehicle. It needs to go to around 12-15 lakhs. It is still a matter of time, maybe a decade out, maybe 7 years out. When that happens, maybe we'll re-enter maybe at that point. But we did evaluate it from all dimensions. I did not find it viable. I won't comment on the competition and why they're pursuing it. But obviously there has to be a purpose there also.
Got it. Amit, you are an IPO-bound company. What's your metric for gauging when CarDekho Group is ready for an IPO? Is it a certain level of revenue that you are looking at, or are you looking at, say, back-to-back quarters of profitability? How do you gauge when a company is ready for an IPO?
There are a lot of learnings from other tech companies which have gone public. So I think what we have picked is a leaf from their playbook only on what worked, what did not work. So what I've realized is, taking a company out which is profitable is a good idea. So, and having a trailing track record. Not like that I become profitable this quarter, I go public. I want to have like at least 4 quarters to 6 quarters of track record of profitability. That's one. Number 2 is go out with a story which is not unviable or unbelievable. Let's say I'm making 1 rupee profit and I'm claiming I'll make 100 in the next 5 years. If you want to make 100, go at 20. So that's the way I look at the problem statement. So make the story more believable with trajectory and track records, and that will make the people who are investing in a stock more believable. Go at the right valuation. Don't overprice the IPO. So that's the plan, and depending on the macro, obviously time it right.
Amit, you are ending FY24 with a healthy cash balance on the CarDekho Group sheet. What sort of inorganic acquisitions do you have in pipeline? Will they be in the auto tech business? Will we see you diversifying further?
So as I said, we find adjacencies. So we are already into auto tech. We are into insurtech. We are into fintech, and this is a large area of areas which same consumer that I spoke about will probably delve into. So we obviously evaluate from that perspective. We have recently acquired a company called Rev, and that's into mobility solutions. They are into self-drive rentals, but we are now expanding it into subscriptions, long-term, short-term. We are also expanding into fleet of cars, which can ferry you around the city or intercity. So we are looking at more larger addressable markets in Rev now, because self-drive market is very small as a total addressable market. Now to increase the time, we're entering 2-3 more areas around mobility for people. We'll also look at more adjacencies, what can we launch for the same consumer. We are looking at driver as a service, car as a service, car and driver as a service. We are also evaluating retail space, how spare parts, batteries or something can be sold. We're looking at, a right kind of assets available in the market with certain scale. We'll be definitely interested to partner with them.
Interesting. Last question for you today. You are a shark on Shark Tank. One question I'd like to know the answer to is, what are some Shark Tank startups, whether you've invested in them or not, some startups that you see hitting that level that maybe CarDekho is at today, maybe sometime in the future, and then probably graduate into an IPO company?
Look, I think IPO is a very long journey. It has taken me myself around 16, 17 years have already passed by. So judging them by current Shark Tank stage to there will be very difficult. It's a evolution of each company. I also evolved. To become such a large company, it is a power of compounding and consistent growth with sustainability. Many of the founders that have betted on, I believe, can be creating a good company. Whether it will be as large as CarDekho will depend on how market unfolds for them and what strategies they deploy. Having said that, I think I've definitely invested into some of good ones. I like Dobby as a founder, doing very well. Nish here has done very well. Others would be Maisha. I think there are multiple startups. FunGrow is another one. So they're Gladful being another one. So I think there are many that I've invested in are doing well, and let the journey evolve for them and let's see how it performs. There's another one, Medulence, I really like. That can also be big.
So thank you so much, Amit, for sharing your views today and having us here at the CarDekho premises.
Pleasure.